Welcome to Earnings Central. In this video, we'll break down Aehr Test Systems' fourth quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $14.8 million. The company actually reported revenue of $14.1 million, missing expectations by 4.7%. This quarterly revenue also marked a 15.1% decrease compared to the $16.6 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was a loss of 2 cents per share. The company actually reported a loss of 1 cent, exceeding expectations by 1 cent per share. However, this result reflects a 48-cent per share decrease compared to the 47 cents per share profit reported in the same quarter last year. Now let's dive into some additional performance metrics highlighted during the earnings call. First up, gross margin dropped to 34.7% in Q4, down significantly from 51.5% in the same period last year. Now, before you panic, there's a strategic story here. This margin compression was primarily due to product mix changes, facility consolidation costs, and lower manufacturing utilization as they upgraded their facilities. But here's the positive side. Annual bookings jumped 24% to $61.1 million. This is crucial because bookings represent future revenue, and it shows strong customer demand for their testing solutions. The company is clearly winning new business even as they navigate this transition period. Their backlog sits at $15.2 million at year-end, which provides revenue visibility going into fiscal 2026. Combined with early Q1 bookings, they are looking at an effective backlog of $16.3 million, giving them a solid foundation to build upon. Now, the cash position dropped to $26.5 million from $49.3 million last year. While this might seem concerning, it's important to understand where this money went. They spent $11 million acquiring Incal technology, $5 million on facility upgrades, and additional amounts on inventory and working capital. These are all strategic investments in their future growth. Speaking of facilities, their consolidation efforts will save $800,000 annually going forward. They successfully closed the Incal facility and integrated everything into their Fremont headquarters, creating operational efficiencies that will boost margins in the coming quarters. Finally, we're seeing a dramatic revenue mix shift from silicon carbide to AI focus. This diversification is perhaps the most important financial story, as it reduces their dependence on any single market segment. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The biggest news is their first-ever AI wafer-level burn-in system. This isn't just another product launch. This is potentially industry-changing technology. They've developed the world's only system capable of testing AI processor wafers before they're packaged, which could save manufacturers millions in yield losses. The numbers tell the story of transformation. AI now represents 35% of revenue versus 0% last year. That's an incredible shift in just 12 months. Meanwhile, silicon carbide, which dominated their business, dropped from over 90% to less than 40% of revenue. This diversification significantly reduces their market risk. Even more exciting, they now have a second AI customer beginning evaluation. This customer is looking at transitioning from package level to wafer level testing, which could represent a significant production opportunity if the evaluation succeeds. The company expects this evaluation to take 1 to 2 quarters, but the potential upside is enormous. The silicon carbide business dropping from 90% to 40% of revenue might sound negative, but it's actually strategic diversification at work. They're not losing silicon carbide business, they're growing everything else faster. This positions them much better for long-term sustainable growth. Their package part systems are growing strongly, accounting for 44% of Q4 revenue. The Incal acquisition has been a huge success, with Aehr shipping more package part systems in less than a year than Incal did in the previous 3 years combined. This gives them a complete solution portfolio for AI testing. Finally, multiple new markets are showing promise beyond AI and silicon carbide. They're seeing traction in gallium nitride power semiconductors, silicon photonics, hard disk drive components, and even flash memory. This diversification creates multiple paths to growth. What makes Aehr's story so compelling is the convergence of several technology trends. AI processors are becoming massive, expensive, and require extensive testing. The traditional approach of testing after packaging is becoming economically unsustainable when you're dealing with devices worth thousands of dollars that incorporate multiple high-bandwidth memory stacks. Their wafer-level testing approach allows manufacturers to identify defective chips before expensive packaging, potentially saving millions in yield losses. When you're talking about AI processors that can cost over $1,000 per chip coming out of the fab, plus expensive packaging with multiple memory stacks, the economics of wafer-level testing become overwhelmingly compelling. The company is also benefiting from the broader semiconductor reliability challenge. As chips get smaller and more complex, they're becoming less reliable, creating increased demand for burn-in and testing solutions. That wraps up our recap of Aehr Test Systems' fourth quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.